Hello and welcome to the SCI video series to support the Accounting Foundations course. My name is Eric Andrews, and in this video we're going to be looking at the general ledger. Let's start with a review of the accounting cycle. In prior videos we covered the process of analyzing transactions with what are called T accounts. We also learned about how to journalize the transactions in the general journal. And in this video we're going to learn how to post the transactions from the journal to the ledger. Let's get started. So what is posting? Posting is the process that transfers the transactional data from the journal into what is called the general ledger. The ledger is the living document where all of the information about the accounts live. Each account represents one part of the business. These ledgers are set up like you see on the screen. You have information on there that designates what's important about that account, things like the name and the number. You have columns for dates, descriptions, posting references. This is all information that we're going to use as we move the information from the journal to the ledger. Finally, there's columns for debit and credit entries, as well as a debit or a credit balance depending upon the type of account. So let's go through the process of transferring information from the journal to the ledger, what we call posting. In this situation, step one, we're going to take the information that is on the ledger form, the date, and move it to a column on the ledger form for the date. This will be a single entry on that ledger line, just the same way it was an entry on the journal. Notice that the second step, we're going to be moving the page of the ledger down to the posting reference. We put a J in front of this to let us know that it came from a journal page. Step 3, we're going to enter the information from the debit side of the journal. And this is going to now become a debit entry on the ledger account itself. Next, we're going to update the balance from that debit entry. Since equipment is an asset account, it's going to have a normal debit balance. So a $5,000 debit entry is going to increase that to a $5,000 debit balance. As you're going to see when you start working with these, if you have additional debit entries, that will increase the debit balance. But if you have a credit entry, that's going to decrease the debit balance. This is an area where people tend to get confused. When you have a credit entry in an account that has a debit balance, it doesn't go on the credit side. It simply reduces the balance of the debit side. This is an area that will take a little getting used to, but what you want to remember is that you will never have entries in both the debit and the credit side of the balance columns. You'll have entries in the debit and credit side of the entry columns, but not of the balance columns. So next we're going to look at the idea of putting the information about the account number itself back in the journal. In this situation, the posting reference column on the journal is where we'll put the account number for that particular account. So general ledger accounts, as they appear in the ledger, follow a set of rules. Assets are listed first, followed by liabilities, then owner's equity accounts. Revenue is then listed, followed by expenses. This is the same order that you're going to see on what is called your chart of accounts. This is the structure that all companies follow, and the numbering system is aligned with this. And we'll get more into that as we get into the next section. So that concludes our overview of the general ledger. Thank you for watching, and I'll see you in the next video.